My name is Will Morris. Thank you for tuning in to the Real Estate Investing Show. I will be your host, and I hope you enjoy. Real quick about me. Again, my name is Will Morris. Not sure if you've heard of me. I'm making my wakes here, and basically, I have went from 0 to 655 unit on the GP of 655 units in 6 months, using some strategies that I've developed and that social media and these strategies and raising capital, it's allowed me to gain access to get on the GP of these deals, and once that starts, it's phenomenal. So you start getting that attention. I've been in multifamily for about 8 years now. However, I come from the value add side of things. I actually have an import-export business to where I was importing international trade business, where I was importing the components for the value adds and whatnot. I've done a little over 3,000 units in value add, so I was familiar with it. I knew about it. However, I just didn't know how to get into it. I didn't have the capital. I didn't have $1 million to throw down on a deal. I knew some guys. I worked with some pretty large syndicating companies and operations. However, it was more on the acquisition. There's the word I'm looking for. More on the acquisition side of things, and so you're in with them. You get to undersee it. I got to see the deals. I got to look at the deals, but I just didn't have the means to get in. And but what I did have, when you have nothing, the one thing that you can do is be resourceful, and that's what I did. I used what I knew and what I could get my hands on, and a lot of it goes to this guy right here and social media. It's amazing what you can do with social media in today's time. And I've actually got an ebook that I'm working on. Hopefully I'll have it out here very soon, and it actually outlines my exact strategies that I've used to raise capital, to get in front of investors, to get the attention to where now, like I said, I'm in the GP on 655 units, a little over or almost $28 million worth of real estate. And I've done that with 0 of my own capital, and it's moving forward. I've got attention now to where I've got deals coming in, and I've got investors coming in. I've got some large larger money, larger acquisitions. The deals are getting bigger, and so things are working out pretty nice. I want to keep this train going. I want to keep moving along. So, anytime throughout this show, or hopefully I'm going to start putting out a lot more, reach out to me. Let me, let's talk. I'll sit down and I'll talk with anybody. We'll jump on the phone or a conference call, or, we'll jump on a Zoom meeting, whatever you want to do. I want to show you guys what I've done, because if you can do what I've done, investors, if you're a accredited investor and you're looking for deals, I've got deal flow. I'm getting off-market deals that are literally half price per door what you're seeing out there in the market, and you're just, when you have the attention and you're getting attention, that's where your deals come to. So what I need now is I need more investors, guys. Let's put our money in some good deals, and let's all of us make some money on top of the tax benefits, the depreciation. Just multifamily is really truly the holy grail. Got a podcast coming up with a guy named Chris. He is a friend of Joe Fairless, so kind of in that world. We're going to be talking about value adding. We're going to be talking about the importing and the tariffs that are on the imports right now, and how we're how to move around that if you're interested. So like I said, I'm going to share some knowledge on that side, as well as the social media, how to do what I've done through social media, how to raise money for yourself, and if you're an investor, how to find proper syndicators to park your money with, how to partner with, how to find great partners, because there's a bunch of them out there right now, but there's some that are more interested in selling tickets than they are real estate. But anyway, wanted to run over a deal with you real quick. This is one deal that again I'm in the GP on, and it's a sweet little deal. It's actually we're getting close to subscribing this thing. We're actually trying to, I think we're going to shut it down here the end of August is when it's go. If you like this one, please reach out and let us know. So let's jump in to this deal. All right. This one is in Corsicana, Texas. The name of this one is Kenwood Heights. It is a 211 apartment units. It's an expected 20.7% IRR, which stands for the internal rate of return. As I go through this, I will try to help out with breaking down some of these terms if you're not familiar with them. If you are, great. And if I make a mistake, you let me know. I don't act like I know it all. But anyway, it's 8.9% average cash on return. Going down to the project overview, and again, this is just a high-level overview. And the reason why I don't want to get into too detailed on this, just because if you are interested, let's jump on a call. Let's get on. We'll jump in on this one and actually work it out and tailor it more towards you and your investment. What you're actually looking to contribute on this. So again, 211 units. It's next to the Navajo College. I want to point this out right here. The multifamily fundamentals in Corsicana has been strong with a historical occupancy of 95% over the past 10 years. So why is that important? That's important because that market is screaming for rent growth. The rent needs to be increased there. And how you can tell this again is because the 95%. So if you've got your market has 95% occupancy rate, that means that basically rent's cheap. And so that's why this is a great opportunity to a great location to make this kind of value add opportunity, because it is it's ready for it. So let's jump on down here. Investment overview, again, 20.7% IRR, investor return, 1.7x on your equity multiple, which is awesome. 7% investor priority projection. Okay, so that is your preferred return. Now, what does that mean? That means if you basically, for whatever you get, you're getting the first 7% of the profits on this. So you're getting a 7% preferred is what it's called, which is good. A lot of people only offer 6. 7's kind of a good medium, middle of the road, I guess you'll say. It's good. I mean, you'll be okay with that. 8.9% cash on cash return. Quarterly on the investment distributions. The big one on this, check this out. 3-year investment term. So a lot of these right now are going from a 5 to a 7 year return. This one's a 3-year. It's a quick turn. Now, I do want to point out that this one has a $250,000, $250,000 minimum investment. Now, why does this one have a $250,000 minimum investment? Because it's a 3-year hold. It's a very short hold, so you don't want too many hands in a cookie jar, so to speak. There has to be enough meat on the bone for everybody. So with a higher investment minimum, you basically are, you're weeding out some, and you're only going to have a few in there to where it's going to be highly beneficial for everyone that is within the deal. Now, let's keep on going. The value add, again, like I said, this is a value add strategy. So the value add on this one, the plan is to basically do $5,600. You see here, $5,600 per unit. Interior upgrades, which basically means they are, we're redoing this thing, okay? And you're also going to have about an $850,000 exterior upgrades, which is, that's pretty substantial. I wouldn't say it's, over the top or undermined, but it's a, middle of the road. The big one I want you to focus on is the $5,600 per unit, because when we go in, we're spending $5,600 per unit. And trust me, I know this because, I could actually probably get that number down a little bit with some importing. But anyway, knowing what I know about the value add, we can do really well with this. And this is coming in. This is going to be basically new units in a existing market that's screaming rent growth. So this is going to be no problem. This one should have no problem. Getting the occupancy back up even on a higher rent market. Here's some pictures. The current is outdated as crazy as I've ever seen, of course, but then look at the new finished one. It's going to be more of a galley style kitchen. Looks like some Formica tops. I might be able to get them to upgrade some granite on there if they'll let me get that imported for them. But new appliances, new cabinets, new paint, new flooring, new light fixtures. It's going to be pretty much new top to bottom. Here's the unit mix, just kind of a breakdown if you're interested in that. Pro forma. I won't go in great detail on this just because this is something where we really need to sit down and maybe have just a conversation. But real quick, got a basically 70% senior loan, which would be your debt. So and a 30% equity. So we're not over leveraged in this one. If you get over 70%, 70 to 70, if you get over 75%, you really want to start maybe looking at, it might be hard to cover that in a downturn. But anyway, total acquisition of 11.1 million. Here's your uses, basically what the money's going to be broke down for, and you can see the renovations inside and out, working capital reserves, and anyway, we'll keep on moving down. Senior loan, again, this is just breaking it down, kind of giving you some more details on the debt side of things. Pro forma, this is showing you where basically what this property is going to do. We do need to look over this. Your effective income, this is where the rent growth comes in. As the rents go up, so does your gross income. Now, expenses. I want to stress to you, as far as whether you're syndicating, you're investing, you're an investor, you're learning, you're getting started. Make sure you get these. Make sure you get actuals on the expenditures, because I'm in a deal right now that we were pushing for. We had it under contract, had an offer in, I accepted. They just hadn't signed the contract yet, but we had an accepted offer, and I'm glad that they didn't sign the contract yet, because once we kept hounding them for actuals. Where's your expense? Actuals. And we kept getting it, didn't get it, and then finally we got their actuals, and there was $183,000 discrepancy on the utilities. So that is astronomical. That changes the whole game. So we're having to pull back, basically renegotiate the same deal. That particular one, we already have subscribers in that one. So the problem with that is we have to make sure that the returns are going to stay the same. Everything on our end has to stay the same, or we'll pull the plug on the deal. But we're negotiating that one to where we're going to keep all the numbers the same. We're basically just going to lower the purchase price because the NOI is lower now. But as an investor, you have a right to see the actuals. So if you're looking to get into this deal or another deal or what have you, ask for the actuals. Just because it's on a pretty pro forma or memorandum, don't you don't have to believe that. Ask for the actuals. You can see them, and that's the reason why, because people do lie, unfortunately. But anyway, so here's your payroll. I'm sorry. Let's jump back in here. There we go. So here's your payroll, admin, marketing, contract services, repair, maintenance, turnover, professional services. Everything's listed here. But here's what I want you to focus on this deal, as far as a review of this particular deal in Kenwood Heights. The net operating income. Check this out. Okay, keep in mind this is a 3-year hold, and you are going from a NOI of $453,000. So you got an acquisition of 7.3, whatever it was, 7.3, 7.7, and with an NOI of $453,000 in 3 years. 3-year hold, you're talking about a $910,000 NOI. This property is going to explode. Okay, amazing returns estimated on this one. And again, here's an additional pro forma with the net operating income, just kind of segregating it out, talking about your debt coverage ratios and how this one's actually going to perform over the next 3 years. this again, this is some great information to really get into. And I'd really like to break it down more, for you, tailored towards your exact investment. So, but anyway, total cash. Let's see. Here we go. Total cash flow. You're going from 168,000 in the first year to 5.5 million. Is that right? Having a hard time seeing, but like I said, this thing's going to explode in 3 years. Your investor cash distributions, here's another one to where we really need to sit down and tailor it to you. But just an overall, I want you to look at this investor IRR, which stands for internal rate of return, 20.69% in 3 years, guys. 3 years. I mean, keep that in mind, okay? This one's a 3-year hold. A lot of, majority of these are 5 to 7, some even 10-year holds right now. Your investor return on investment, ROI. Everyone knows return on investment. I call it, I don't call it, but I've heard it called return on, draw a blank. But anyway, return on investment of 1.7 times your money. And that's return on information. That's what it is. You got the right kind of information. You're listening to me. You're getting this information. I'm getting this stuff straight. I'm partnering on these deals straight off of the, these are not hitting market is all I'm trying to say. So return on information. You got the information, the inside information, whatever you want to call it. And that's why you're getting some great deals here. So again, 1.7x on your money. This is in 3 years. I mean, this is awesome. Rent comparables. I'm not going to spend a lot of time on that, but this is definitely something to look at. In my opinion, in my eyes, the occupancy rate for so long in this market kind of tells it all. But there are some great comparables here as well. And location, as you can see, this one's just south of Dallas. Here's Dallas, and here's Corsicana. It's just northwest of Corsicana at the starred location there. Location highlights. It's a good area. It's got the Walmart. It's got Aldi. Pizza Hut's got some fast foods. I mean, so it is a it's a good area. It's not like it's a ghost town or anything. Here's a aerial of the property location as it stands from an aerial view. You can see it's a good residential market there all the way around. Here's management team on this one. You got Craig and Alan. They are with they're the investment offers with the Diversity Fund on this one. Here's a management team that will be steering this one down the road. But anyway, that was it. I hope you guys enjoyed that. Wanted to just share some knowledge with you about it. And this is one that we do have. It is coming to a close. If you are interested in this one, this 3-year hold, this is the only 3-year that I've got. The other 2 that I have right now are a 5-year. So, if you like it, let's talk about it. Let's sit down. Let's see if it works for you. I do have some other deals coming up. Like I said, I've got 2 other deals right now that I'd be happy to show you that we're actually subscribing for right now. But I do got some other deals coming up in here shortly. I actually have, it's kind of keep it on the low, but I actually got a 600 plus unit deal coming my way. Supposed to be having some phone calls about it this week. So some big things are happening. If you guys want to get in on this, you want to ride this train, let's keep it moving. This is a great opportunity for you to jump in right now. In my opinion, this is a good one. I do have 2 other opportunities I will be doing some more videos on those in the following days. And I hope you guys like it. Give me your feedback. Let me know. Again, look for my ebook. I will be doing a blast coming out. I'm blasting it out everywhere because I want everybody to see what I've done that's put me in this situation. I mean, literally 6 months ago, I was goose egg, zero units. And, I've done this with 0 capital as well. So if I've done it, you guys can do it. It's actually easier than what you think it is. It's just a mental game. You guys need to get your head straight. And investors, credit investors, if you guys want to see some more of this information, please let me know. If you got a deal, you got deals, send them my way. We'll partner them on them. I am looking for partners. I'm actually building my team out. So even if you are more knowledgeable about certain situations, certain aspects of this, please reach out to me. I'm trying to build my team here. We are growing fast. Like I said, got some great things happening. Got a podcast coming up, as I said, and I will be spreading that out again. And you know what, guys? I really do appreciate your time. I know it's valuable. I appreciate you giving me the opportunity to share what I've got going on and to share my knowledge. If there's anything I can do to help you, please reach out. Let me know. If you want to partner, let me know. If you've got a deal, if you want to sell, if you're tired messing with it, let me know. I do have some resources. So you guys take care. Thank you again, and have a good day.